Good day, fellow investors. We continue with our stock market irrationalities series, and today's topic is the stock going up and down versus investing. I've had two great comments from Peter and Karel asking about this behavior and whether it can be taken advantage of. In real daily life, everyone is trying to buy good quality stuff as cheap as possible and then proud about that tells everyone he made a great deal. But in the stock market, not many care about the price they pay. Why? Because everyone in the stock market just wants to see the stock go up. What's the price doesn't really matter. They don't understand price and value. Secondly, Carol in that line discusses that there is a problem if a great company, let's say Starbucks, is cheap. Everyone will want it. So they'll push the stock price up. For Starbucks to be cheap, everyone would have to be scared of stocks, and that would happen if maybe US bonds would yield 8-10% a year. Can that happen? Sure. Is it imminent? Don't think so. So you will never be able to buy Starbucks, a great company. What am I missing? And Karel, you are missing this, that people are not buying stocks because stocks are cheap. People are buying stocks because stocks go up, and people are selling stocks because stocks go down. Just a quick mention here for my research platform. If you cover many stocks, then sooner or later you will get that great business at a cheap price. It doesn't have to be Starbucks, but put it in a time perspective. So this is the chart of Starbucks, and of course now it is a great business. Doing great, stock price is very high, but there were opportunities to find those businesses at very low prices. So you must not think, okay, now I have to find a great business. You must think, okay, these are 2 decades, and then in this period, let's find a great business. Wait a year, wait 6 months, follow more, and I'm sure sooner or later something will find. So to come back to our irrationalities, that I have to emphasize are not easy to deal with. All of us have them. You feel good when a stock goes up, but that's not investing. So it's very important to focus on this. Investing starts with oneself. As Benjamin Graham says, the worst enemy of the investor is the investor himself. Thus, different behavior with stocks. And of course, one of the most viewed Gary Vee video is where he turns $75 in pins into $1,000 from some garage sale. But it is completely opposite with stocks, because now Nvidia that jumped from this 50%, now it is the best and most wanted stock. So even after the recent jump, it went up another 13%. Why are people buying this now? Because the stock is going up. It is a clear trend. But just 7-8 months ago, the semi-industry sector was in a really bad position, recession, oversupply, whatever, and the stock was down 65%. Why was it going down? Because it was going down and the outlook was bad. So in the stock market, it is not about investing for 99% of people. It is about whether the money they have will be worth more or less. And when there is a trend confirmation going up or down, simply people think, okay, it's going up, let's buy more, let's make money, it will change the world. When it's going down, it is a disaster, let's get out of this, forget about it. That was Nvidia last year. So that is the attitude there, and therefore the market isn't rational. If the market isn't rational, if you can behave rationally, then you have an advantage. How do you behave rationally? Forget about stocks going up, but start thinking about doing good. And that's the key differentiation. Okay, I own this business. What do I get from it? Dividends, business growth, value creation, and not the stock is going up. As soon as you focus on the stocks going up, you do extremely well in great times. Like all the other YouTubers focused on growth stocks did for certain periods of time in the last 5-6 years. But when that growth stopped in 2021, they lost most of their money. That's speculating. That's following the trends. Investing is just building those earnings, those assets, the equity, compounding over the long term. Let me show you. So let's find some good investing. And we discussed Rio Tinto just a day ago, just a quick overview, but let's discuss this deeper and see what is good investing there. So we have Rio Tinto. As you can see, it is extremely volatile because it is a cyclical. It depends on demand for iron ore. However, what is great investing in Rio Tinto? You have to wait for a cycle downturn when everyone is selling, not what everyone is buying. How often does it happen? 1, 2, 3, 4. So you just have to wait for that to happen. Global slowdown, recession, China issues, etc., then it happens. Now, if you buy in a cycle downturn, the dividend yield now is 13%. For those that bought here, the dividend yield is now 25% on cost. For those that bought here, 40% on cost. And that is insane, but that is how the cycle works. So if you are lazy, you can just hold it even on the ups and downs. If you want to be more, let's say, opportunistic, then you wait for those downs. However, when it comes to investing, it's not here about buy low and sell high. It is about understanding the cycle average earnings of Rio Tinto. Now they should be around 8 to 10 billion. Thus, if you want to buy it cheap, you have to say, let's say 8 billion to be conservative, times P ratio of 10. That is at a market cap of 80 billion, which is then 30% down. And if that happens, then Rio Tinto is a great buy. But you have to be very, very ready to see it go even lower in a cyclical environment. And if you manage to buy it at 80-90 billion, that's 8-9% long-term average dividend. That will go up and down. 3% growth from inflation, a little bit from their own growth. That's 10-11% per year, and that's a great return. And that is exactly what Rio Tinto did over the last 30-40 years. Given the dividends, it did destroy the S&P 500 pretty much. So the key is, of course, if you buy it now, if it goes down 50%, you have to double your position. That's the key. And now you always ask me, Sven, give me more, give me better investing ideas, give me better buys. If we go to my channel, let's simply discuss. As we discuss my research, I share something of what I do. Let's discuss some other good ones. Another very interesting oil opportunity that you can follow here. I try to give you here and there some interesting businesses, food, Amsterdam commodities. So that's one a month. If you want all of them, if you want more, if you want the details, of course, check my research platform. Thanks for watching. I'll see you in the next video.